I'm Andrew Murphy, Co-Chief Investment Officer at Winthrop Wealth, and welcome to our 2025 Market Review and Outlook. In this video, I'll walk through another strong year in both equity and fixed income markets, highlight the key drivers behind performance, and share how we're thinking about the environment as we head into next year. I'll also briefly revisit our long-term investment philosophy. Please visit our website at winthropwealth.com for details on our total net worth approach to wealth management, which combines both comprehensive financial planning with a disciplined, long-term investment process. Let's start with the equity markets. The U.S. equity market delivered another strong year, with the S&P 500 up nearly 18%. That marked the third consecutive year of double-digit gains. Despite a sharp pullback in early April, the market rebounded quickly, leaving the S&P up more than 100% since the bull market began in late 2022. Overall, performance was driven by strong corporate earnings, continued optimism around artificial intelligence, and rate cuts from the Federal Reserve. A big contributor to those returns was once again the Magnificent Seven. While only Alphabet and Nvidia outperformed the broader market this year, the group still accounted for over 40% of the S&P 500's total return, reflecting their size and influence. That concentration helped drive another year of growth over value, and large caps over mid and small caps. Beyond the US, international equities outperformed for the first time in 3 years, supported by a weaker dollar and improving growth dynamics. As always, we construct diversified portfolios and tilt toward the areas we believe offer the most potential benefit, with the goal of delivering more consistent and less volatile long-term results than relying on a single asset class. Turning to interest rates and fixed income. As labor market conditions cooled and inflation pressures eased, the Fed cut rates by 75 basis points, and longer-term yields also moved lower. The Fed's latest summary of economic projections points to one additional cut in 2026. As a result, short-term yields should continue to decline in the coming months. Against this backdrop, the Bloomberg Aggregate Bond Index increased by 7.3% as the 10-year Treasury yield fell by about 40 basis points. This marked the third consecutive annual gain for the AGG, and the best calendar year performance since 2020. Looking ahead, we believe intermediate-term bonds remain an attractive investment opportunity, as the yield to maturity on the AGG index is 4.3%. Looking ahead, our short-term outlook remains cautious, given the exceptional recent market performance. Although speculation has cooled in some areas, signs of froth remain evident, including stretch valuations, elevated leverage, and outsized gains in non-profitable technology stocks. The key factors we're monitoring include nomination for the next Fed chair, the Supreme Court decision on the legality of tariffs, the trajectory of artificial intelligence, and the overall health of the labor market. While these developments may lead to volatility, market declines are an inevitable part of investing. What matters most is how investors respond. We aim to stay vigilant and use these periods as opportunities to make lemonade out of lemons, whether through tax loss harvesting or reallocating toward more attractive securities. As we outlined in our Navigating Volatile Markets commentary, maintaining the right mindset, a comprehensive financial plan, and a disciplined investment process can provide confidence in working toward long-term goals. As always, our goal is to put our clients in the best position to achieve their long-term objectives by staying disciplined, opportunistic, and diversified, while striving to mitigate fees, taxes, and expenses. Thank you for watching. Please see our principles for long-term investing. Please visit our website at winthropwealth.com to learn more about our total net worth approach.